Gold gains momentum and easily took out the $1,300 level earlier this morning as the US dollar slumps. But is the dollar weakness really behind gold's rally, or is there something else at play? Joining us now is Kitco's Global Trading Director, Peter Hug. Peter, thanks for joining us again.
Yeah, nice to be back with you again, Daniela.
So, Peter, an exciting day for gold traders here. The metal hit a 15-month high earlier today. Are you constructive this gold market, Peter?
Yes, I am. I think there's significant support in the 1288 level right now, and this precious metals rally over the past couple of weeks has been premised on dollar weakness, specifically dollar weakness against the yen, and I don't think that that's going to abate anytime soon. There are some issues that may come up, near the end of May when the G20 meets. We'll have to watch that closely to see if there's any interventionist jargon that comes out of those meetings. But right now, it certainly looks to me like the dollar is going to continue weak in the short term, and that's been one of the catalysts for the move up in gold. Well,
Peter, we also saw massive profit taking in gold recently, and funds seem to have missed this latest gold rally. How will investors react from here?
You know, I have some sympathy for investors. I mean, they've been, for the most part, out of this market. And I've just based on our volumes and our ratios. Technically, from a retail perspective, your ratio should be about 80-20, 90-10 buyers to sellers. And that ratio is much closer to 50-50 over the past couple of months. And I think what that represents is that retail investors that have, every time the market has gone up and they've sort of chased the market, have been rewarded with a correction back down. And so they're a little reluctant to get into these markets, especially with gold at 1,300 and silver, at around the $18 handle. I think that, if we can get gold over 1,300 and silver established over $18, I think retail investment comes back into this market.
Okay, so safe to say 1,300 is the key technical level that you're looking at for gold, Peter?
1307, I've been saying it for 2 months, is a level that I need breached on the upside. Today was the first attempt. It got within $1.50 of 1307. If we can get 1307 cleared away, I'm looking for an immediate target, well, a short-term target of a sort of the 1335 range. We get through there, then I think 1380 is in play.
Finally, Peter, you mentioned silver before. It's at levels last seen in early 2015. Is this the move silver traders have finally been waiting for? Is it all upside from here?
I think silver is fully valued on a ratio basis to gold. I mentioned that about 10 days ago in my commentary. Silver rallied from about an 82-to-1 ratio to gold back down to 72-to-1. At that point, I considered silver fully valued relative gold, given the current economic climate. By that, I mean the growth prospects that are still somewhat sketchy, both in the Eurozone and in the United States, for that matter, and also from China. So I think the ratio is fully valued here. I think silver continues higher if gold can break up through $1,300. But I think silver now will trade more directly in line with gold and not necessarily run ahead of gold until we see some better economic growth.
Thanks so much, Peter.
You're welcome, Danielle.
And thank you for watching. Stay tuned. We have comments from U.S. Global Investor CEO Frank Holmes up next.